welcome everyone to this episode of Perpetual Perspectives powered by Vest Exchange. Vest is a novel perpetual futures exchange built on ZK Sync. This is your host Stoic, and today I have the pleasure of having with me Salsa, aka SalsaTekila on Twitter. He's been in the game since 2010. I mean, technically speaking, first learning about EV and MMO games, and then entering into the crypto arena in 2017, which makes a total of 14 years. So it's a quite a long time, out of which 7 years are in the area of trading crypto specifically. I've been looking forward to this conversation for a while. First and foremost, thank you, Salsa, for taking the time out, and we can get right into it. Could you please introduce yourself?
Sure. Thanks for having me in the intro. I'm Salsa on Twitter. Those of you who know me probably know me for the trading content since many years ago. I think 2017 I started being active. So that's what I do. I mainly trade. Sometimes I'm known for the loss porn on Twitter because I post my losses a lot. That's about it on me.
Yeah, I appreciate you introducing yourself. And one question that I ask everyone that comes on, and it's a bit of a silly question, but sometimes people have like more of a story behind it. So I like to ask what made you choose your account name on Twitter, or if there's a story behind that at all.
Oh, it was just a song. Many people asked me before. I was listening to that song called "SalsaTekila."
Oh, okay.
It resonated. I found it tacky. It stuck to my head, and I just when I create the account, I type "SalsaTekila."
Makes sense. And speaking of your story behind your account name, I know you've covered this several times, so we don't have to go into like too many details, or it's up to you really. But what was your background before crypto and trading? How did you get introduced to trading, for that matter? And do you remember your first exposure to it?
Sure, it was 2013. I was playing video games and making money off of them, and I sold them for PayPal initially, but PayPal didn't like that. They banned my accounts, and I had to find another way to do it. So I found Bitcoin. It was purely out of use case. So Bitcoin was useful to me, and it worked. So I did not keep it as investment all the way. I made some mistakes along the way, and I did not have much from 2017, but that's what led me into Bitcoin first since 2013. And when the price started pumping in 2017, there's the ETH ICO. That's when I started learning about trading and getting excited, mainly because everything went up so much that you couldn't not make a lot of money. Then had my lesson in 2018, like many, and that's kind of where I stuck to trading. Many people, they make and lose a lot and they would quit, but I was in that position where I could risk sticking around for a little longer. I was still young. I could live in my parents' basement if things go south. University is quite cheap where I'm from, so I was viewing it as a trade. I'm risking like 2 years of my life, and if it doesn't go well, I go back to school. If it works out and I make good money, then I can make a career out of trading.
Yeah, thank you for sharing that. I know you've shared this story multiple times. But one part specifically that I'm interested in, the time that you spent before trading, learning how to trade in an indirect manner. What did you feel you learned from that during that time period? Because I feel like that mentality is different in terms of EV, right? A lot of people don't grasp that concept, even trading for a few years that I've spoken to. So I'd really like to get your insight on that and what you learned before getting into trading.
Yeah, so EV stands for expected value. And basically, every time you take a bet, you want to have a positive expected value, and that's what qualifies your bet as a good bet. So if you take that bet multiple times, you're expected to make money. Let's say you take that bet infinitely, you 100% of the time will make that amount of money in average. So expected value is just some kind of very basic mathematical concept that somehow people don't think automatically. And that video game I was playing, essentially, I had to take various bets, and I had to calculate the expected value of every bet to make sure I had a positive expected value every time. And that's how I made my money. It was kind of like a casino, but I can beat the casino in a way because the odds were on my side. So if you learn to think in expected value and to only take a bet when you have positive expected value, it's one of the key pillars that will lead you to a profitable trading career. Obviously, in trading, it's a little less concrete because I could calculate back then exactly my expected value on any bet. In trading, oftentimes you have to kind of eyeball your expected value. You think, okay, if I enter here, most likely I can get this much reward for this much risk. And I think 30% of the time I will get paid on this, let's say. So you eyeball your expected value. You cannot really get a very concrete assessment, at least the way I do things. It's mostly just from experience. I eyeball my expected value, but nonetheless, being able to think in terms of expected value is really something that translates to a good head start at the trading game. And I think that's why also a lot of poker players turn out to do pretty well in trading, because they have that mentality. It's second nature for them to think in EV.
Yeah, 100%. I think that point is huge. And it's interesting. Was that something that's intuitive to you, or did you start looking, like, as you were playing that video game and earning money? Is that something that you intuitively grasped, or is it like you had a mathematical background in terms of looking it up and learning about expected value? How did you stumble upon that concept?
No, you just learn it from making money doing it.
Right, right.
For many years, I played that video game for maybe 6 years. At some point, after like 1 year, it becomes second nature. It's just every time you take a bet, if you have positive expected value, you take it.
Right.
The sizing is what matters ultimately when you the only thing other than expected value on your side that matters, because if you bet the bankroll on the thin edge, then maybe you risk bankruptcy, and that can take you backwards more than not. But ultimately, I would try to maximize EV. That's really all I thought about in that video game, and that's how I made money on it.
Yeah, absolutely. I think you touched on an important point that I'd like to talk about a little bit later in terms of sizing and how to, have conviction. What I wanted to ask you was, what did your trading look like initially, when you first started trading, and how did you go about learning? Was it just trial and error? Did you like look for inspiration from other people, or, read anything? Like, what did that process look like
Yeah,
when you first started to how it
I
is now?
sorry, you cut for a moment. I was mainly on the basically in 2017. You didn't really need to learn to trade. I was a shit trader. I just happened to have a lot of shit coins that go up 100x.
Mm,
So let's say I traded on BitMEX a lot. I got liquidated so many times, but it was very forgiving, because let's say I deposit zero point 0.1 BTC on BitMEX at the
right,
time, and then I traded high leverage and I get liquidated. It doesn't matter, because my shitcoin on Bitrex went 50x overnight and
right.
made me more money than anything I could have lost. So the market was extremely forgiving, because everything went up so much and so fast. And I did not really learn to properly trade. I was mainly just gambling with the leverage and holding coins that went up at the time. That being said, in 2018 is where I really started to learn to trade. I did watch a lot of videos. I think at the time there was some YouTubers I watched, and the thing that you stumble upon a lot is technical analysis, because it's ultimately what's easy to market. Marketers love technical analysis. Everybody
Right.
can understand it. You can sell a bunch of word salad, and
Yeah,
it's kind of believable if you don't know what you're looking at. So
absolutely. Right.
So I stumbled upon a lot of TA. Eventually, I found some patterns that actually provide edge. There's a way to have, I think, slight edge with TA. It's not the holy grail, but you can get some profitable patterns, like swing failure patterns. I think was Trader Dante. I used that a lot, and I made a bit of money on it, especially late 2018. So it was mainly technical analysis driven until 2019, where I joined a prop firm, and then I see guys use order books a lot. They use a news feed a lot. They're really up to date with the narratives, and they follow those things that make a little more sense, but are maybe harder to track. Right? It takes more work to track those things and to gain expertise in using those different tools for execution that can help me not waste so much money to the market when I open and close. So there's a lot of factors that I've never been exposed to that I was enlightened on through that prop shop, because I realized that technical analysis really is not the holy grail. It can work, especially if you combine it with some sentiment. And I know some guys do very well with it, but it's not a big part of my trading anymore. Um, and I would say it's due to that experience in the prop firm, where I see guys who trade profitably using something else, and I know they're not hypocrites, because I see them trade in front of me. Um, So that's kind of the background of how I got into trading. I've not stopped since. I've been pretty much full-time trading since 2017. I would say 2018 more seriously.
Yeah, thank you for sharing that. And it sounds like that prop firm really leveled up your game in terms of looking at trading through a different perspective. And I think one thing you touched upon that's pretty important, I think it's called resulting in poker, or basically attaching outcomes to the process, right? So depending on what environment you get in on, for example, like last cycle, when everything was up only, a lot of people made a ton of money, but lost that same amount of money the same way. Um, because you're attaching your outcome to the process. So how would you say you can separate those two in terms of trading, and how do you go about doing that? Is it just trial and error, journaling, or what advice would you give to people listening in?
So something I noticed in the past few years is I make most of my money in the uptrends. I still somehow trade the bear markets, the chop, but I know that it's not worth my time that much in comparison. But the uptrends are what made me the most money. So the best way to extract value from this market, I believe, is to be able to sit on your hands or recognize that you should size down in more difficult market conditions because you want to retain the money that you make in those uptrends. The life-changing money comes from the uptrends, at least in my experience. And those uptrends come in bursts. Maybe you get like twice a year, those kind of opportunities where you can really milk the market. The market becomes a lot more liquid, a lot more forgiving, and you're kind of in sync with it. So to me, something I implemented was I would deposit only what I need to trade, and that would be my hard stop. So the whole account would be my hard stop. Obviously, I use a stop loss before my liquidation, but I would, let's say, deposit 2% of my crypto portfolio on a leverage exchange maximum.
Right.
And then that's my hard stop on a given day. So I would try to use 50x leverage, and that gives me, let's say, in Bitcoin, a 1.5% stop loss, right? So I need to be pretty precise on my entry. So I try to find spots to enter the market where I can leverage up to that leverage with a stop that's quite tight and a reward that makes sense, so that it's positive EV. And I try to run the account up from 2% of my bankroll. So what that means is, for me to be able to trade size, I need to have a win streak. And typically I trade better after win streak. It can be hinting that I've been doing well. And if I lose the trade, the account goes down. Either I grind from even lower or I redeposit the next day after a night's sleep. So the hard stop on the day must be respected. And essentially, this is better to me than, let's say, depositing 25% of my crypto portfolio on the leverage exchange, because if I do deposit 25% of my portfolio, I will bet way too big. I just know it. Eventually, I will see a trade, and I will be tempted to size up, or maybe it goes against me, and I think the entry is even better, and I start DCAing my position, and that's how you create a monster. And if the market runs against you when you create a monster position, you're way more likely to get stuck and hurt in that position. So the logic being, if you cannot trade a small account up, you will absolutely ruin that big account. I think there's Kobe who said on Twitter something like, if you cannot profitably trade spot, you should never touch margin. I think that's a good way to start. Most people should trade very small and trade only on spot, and then when they get some profitability, they can justify scaling up. But you need to take it in step, in the sense that it's much easier to be profitable on the small account.
Yeah, great. I mean, that's amazing advice. And you touched upon the fact that the most amount of money to be gained is an asymmetric upside, right? And I think the problem that people typically have when in a trending environment is when to take profit. A lot of people, run their account back, and you kind of describe what you do in terms of a hard stop, and you have your stops in place and how you manage that. What's your thought process in terms of taking profit in a strong trending environment? Because a lot of people get flushed out, in that very environment, or run their gains back.
Yeah, for sure. I do give my gains back often. Sometimes I will turn 2% and suddenly it's 20%, and I would bet big and lose that 20%. It happened many times. So I'm not immune to that. But ultimately I still have the other 98% before that
Right.
deposit that's left. So it's forgiving in a way. That being said, I think when you reach a certain size that's not necessary for you to trade with, you can afford to withdraw. Let's say you made 20%, you withdraw 10, and then you run 10. So that way, if it goes south, you have some profit secured, and you can invest it in Bitcoin spot if you believe long term. That's what I do. I believe in BTC. I believe in ETH long term as investments. I think it's probably going higher at some point.
Right.
So I really don't mind investing in those tokens. And also, this is very helpful because if the market goes up a lot and you have some spot backs, you're way more likely to not feel the heat, right? Because you spend all your time in that industry, people know that you're invested. And when the market goes up, if you don't have anything exposed, it can be very painful that people congratulate you and you have nothing, right? You
Right.
didn't make money on the uptrend. So that's why I believe in having a spot bag. Now, the second thing to touch on is you need to secure the lifestyle and never risk that. And that means you need to sell some crypto and to never put it back in crypto. So what I sell from my crypto, I never put it back in, and I try to keep at least 5 years of expense covered, minimum 5 to 10 years. I think is better because the reason for that is I don't have very high education, right? I dropped out of university to go trade with the prop shop.
Right.
So I know I can go back to university. I know I can get qualifications, but those things take time. If I want to gain expertise in a new field, it would take me many years to get very good at it. So I need at least 5 years covered outside of crypto so that if it fails and I need a plan B, I'm pretty secure in that. And so you keep that in, let's say, bonds, stock, things that are not necessarily highly correlated to crypto, so that you have that safety net.
Yeah, absolutely. Thank you for sharing that in detail. And speaking of pain, something I wanted to ask you is, I mean, you've talked about this at length in terms of difficulties and struggle you've faced over the course of your trading journey. Like you said, you're pretty transparent about that overall. What I wanted to ask you was, what was your mentality in terms of coming out on the other side? Because a lot of people obviously end up basically blowing out their whole, portfolio. And at that point, it's like it's really difficult to come back from that. How did you overcome that? Was it just because you didn't have any other choice, or like what was the thought process behind that?
To to recover from 2018, is that the question?
Yes, yes.
Yeah, so I was just stubborn. I think it's pure stubbornness and the ability to take risk because of my youth plus my safety net with my, I mean, the country I lived in has very high tax, but the beauty of high tax is also that you can afford education, healthcare, those things pretty cheaply. So I can afford to take the risk at the time.
Right.
I had parents who were supportive in the sense that if I need a few months to get back on my feet, they would let me live in their basement, and that would not be a problem. So I was really only risking time, basically.
That makes sense. Along the same lines, what would you say you've struggled with the most when trading, or something that you still struggle with, and how do you go about trying to remediate that now?
What I struggle the most, I think the most important is edge, right? I mean, I'm continually doubting whether I still have edge or not. And these past few months have been pretty tough. I had a pretty significant drawdown, the biggest one in a long time, and really I chopped myself a lot. And this makes me consider, do I still have an edge? And let's
Right.
say I take the example of order books, right? I use order books a lot, but now it seems like they don't work like they used to do, especially with the ETF, with Sailor,
Oh
with
yeah, it's a
some
mess. It's a mess. Yeah, I agree with
yeah,
that.
there's a lot of idiosyncratic
Yep.
buyers that hide their flows with
Yeah.
software. So it's very difficult to use order books with the same reliability that I used to be able to generate trade ideas off of them. So it's a continual struggle for edge, and I think that you need to stay very curious. A trick that traders play themselves with is they get complacent in their niche, and it's very good to have a bread and butter, but you don't want to be stagnant too long. And I think I'm guilty of that. Let's say with just software for execution, I get very used to trading ladders before. And I did not want to explore other software because I thought I was very comfortable with that. And eventually I get out of this mindset, and I just become better at exploring new opportunities and finding ways to approach the market differently. I think that's a very critical part of staying alive as a trader. Otherwise, your edge tends to run out over a very long time. I mean, the market changes, become more efficient, and you need to stay up to date.
Yeah, agreed. I mean, that's huge. And, speaking of something that's happening in real time, you're saying, you had a significant drawback recently in terms of the order books, and, trading off the order books is, like you said, I mean, I agree with that. That's what I've seen as well. How are you looking to remediate that? I mean, you don't have to get into like finer details, but do you have any thought process in terms of how you're going to like approach that entire scenario now?
Stay curious. That's the key. You stay curious,
Yeah.
and you need to work hard to find edge. I mean, it doesn't come easily necessarily.
Right.
Like when I started using order books, I kind of just did research for many months, maybe 3 months. I was just watching a lot and trying with small accounts, but I never put any size on it before I had built that conviction in my order book related intuition. Or let's say I try to trade off of a news reaction. Sometimes I get hurt before, especially when trying to short in front of news. Somehow it works less well than if there's bad news that get. I said that a lot, but it's really the biggest signal for me in crypto is when news that are expected to dump the market get absorbed and don't provide the wanted reaction. So let's say market is expected to go down, it doesn't, then I know it's time to just close everything long and step off the screen. It's still difficult for me to do that. And that's because there's different signals that I use. Let's say I look at the order books and it doesn't make sense in terms of order books, but I know I have to shut down the order books and just long because of what I've seen with the reaction to those news. And I struggle doing that. I tend to micromanage too much. So I have some weaknesses to work on like that. And I need to effectively stay curious, try to find ways to perfect my trading. And I think simplification is very important. So if I know one thing works, I should not dilute the edge of it by looking at too many different things. And I think that's something a lot of traders fall to, especially when I started. I mean, I remember I had some very messy charts and I was looking at different things.
Yeah.
And that's effectively what happens. Let's say you have a good long entry and you think that it's going up a lot more. You will see different indicators that will tell you, no, it's time to sell. And you will ruin your edge effectively by looking at too many signals. You should look at one thing, get very good at it. And if there's edge in that one thing, you try to take advantage. You should not confuse yourself in the noise.
Yeah, thank you for sharing that. I mean, there's so many gems that you dropped there. And I think one thing that's really apparent about you is you're extremely transparent, whether it's publicly on Twitter and whether it's in this conversation, which I think not many people are that way. What would you say this self-awareness comes from? Is this something that just when you first started trading, you were this way, or is this something that you developed over time in terms of being self-aware? Because that honestly, I haven't seen that much. It's pretty rare, to be honest. Like
I don't know if I'm self-aware, man. I'm just like that. So
yeah,
I have no idea.
Yeah, all right, yeah. So we talked about your weaknesses. What would you say are your strengths? What would you say that you're some things that you're really good at?
Some things I'm really good at. I think I don't know. I think you mean my edge in the market?
I mean, like in general, like in terms of your strengths, like maybe I mean, it's apparent that you have a lot of grit, right? You're someone that's like willing to push the envelope when it comes to that, or just general traits. What would you say?
I have a lot of experience because I've been staring at the market for so long, and that's what saved me many times. So that grit that you mentioned, it can be stubbornness, and it can be a very bad thing. It hurt me many times. But also when I learn a lesson very strongly, then it will stick. So it takes me maybe a longer time than most people to learn certain lessons. But when I learn it, it becomes a bit more concrete, I would say. So for example, I used to try to fade the market a lot. So if the market does a strong move in one direction, I would fade it. And in 2018, it happened. I remember I had a good profit in like the 3K to 4.5K range, I think it was. And then it started pumping up, and I just kept fading from, let's say, 4K to 6K, and I lost everything that I made back and more. Um, and these kind of lessons, somehow, that one time was not enough. I think it happened again a few years later, maybe 2019, or I forgot when it was, but I learned that being very stubborn against the trending market will just hurt me repeatedly. Yes, I have the risk management to survive. I will take many small cuts, and that's what's going to kill me ultimately. But it's not, the risk management is nothing. It just keeps you alive barely if you get caught
Right.
1,000 times.
Yeah.
So those kind of lessons, like trying to fight a trend or turning off, let's say, I'm trying to sell in front of a guy and it just keeps not working. You
Hmm.
have to be aware that um, those things change. Something that works for a given month will maybe not work the next month. And there was something that we used called the flavor of the week, flavor of the day,
Right.
and effectively it's what worked that given week. We kind of take notes, and every day, and we try to use recency as a way to approach the market. So what works for the past 7 days, um, we try to milk it as much as possible, and eventually those things come and go. Maybe a given week there's a buyer that will buy at a given time zone, and we noticed yesterday they did that. So the next day we look for similar cues in the market to see if the behavior matches. And I think recency is a big thing. So I try to use recency a lot in my trading. Let's say the way I look at order books, if I see a tendency, for example, in the past few days, I will notice that uh, there's very thick offers that just don't get respected, and that's
Right.
probably because some big buyers are using software that hide their flows, like I said earlier. But ultimately, what happens is if you try to short in front of big sell walls, you tend to get blown out. Um, at least in 60K, it's been so. So now we're at 65, almost 64 and above. Yesterday was around 64. There was big sell walls, and if I
Right.
tried to fall from that, I would have lost a lot of money. And those things are tempting, right? If you're a stubborn trader, you will see that and you will short
Yeah.
in front, and you will get
Right.
hurt repeatedly. You will take the loss above 64K, and then you try again before 55. Maybe you've been doing that since 60, 61, 62 and onwards. And those are the kind of things that I learned to submit to, in a sense. And submitting doesn't mean you take the long side of it, but it at least means that you recognize it doesn't work and you sit on your hands. And maybe if you try to long in a smart way. So it doesn't mean longing into the resistance, but maybe it means you try to bid for a dip. So overnight you might be able to catch something, some adverse price movement, $1,000 lower. You try to explore new ways to to take advantage of this market with recency bias in a way that provides value. So that's what I try to do. I don't know if I'm good at it. I don't dare to say I'm good at it because I actually lost money in the past few months. But over the course of a year, I tend to make money. So that's what I can say.
Yeah, I think I mean that's what you shared is extremely important in terms of being adaptable, and then sharing the fact that you look at recency bias and how you adjust in real time. Um, this actually ties into something I wanted to talk to you about as well in terms of trading edge. How would you describe a trading edge? And in a few senses, I mean, you've already gone over the edge. So I mean, how would you describe a trading edge in your opinion? Like, what is a trading
I
edge?
think I think if you cannot at least describe in one or two sentences your edge on a specific trade, uh, you probably don't have anything concrete.
Right.
So that's a good rule of thumb, right? Let's say I'm front running some guys in the order books, then that's literally my edge. So, or if I'm buying because bad news got shrugged off, that's my edge. I can describe it in a sentence, but if you use 20 different indicators and you're like, I'm buying because of this RSI divergence,
Right.
and and, and then you end up having a billion lines on your chart, and you end up closing for another reason, then you're not trading off of your edge, if your entry reason is that, then it should also be your exit criteria. So I think a good rule of thumb is simplicity and being able to describe why you enter a trade. Why you enter a trade is your edge. So just take this habit of whenever you enter a trade, try to make one or two sentences as to why you enter that trade, and maybe note it, and then you will know how to exit, or at least have a way better idea of why this trade has edge, and you can stick to that.
Yeah, agreed. And I think that's we've kind of went over this a few times over the course of this conversation already. Is there's elegance and simplicity, and I feel like over the course of the journey of a trader, what I've typically seen myself, I've gone through this as well. Is you start off really simple, and then you start getting towards, hey, maybe things that are more complicated are going to make me more money, right? So you go into this jumbled area of adding complexity, and like you said, it could be like 10 indicators at the same time or whatever people use. And then what you realize is there's elegance and simplicity. So starting to cut the fat out is ultimately what really helps. One thing that I'm curious about is there's this conversation around either being a specialist and understanding nuances on one asset or a few different assets and being extremely nuanced in your approach versus trading, just trading whatever chart is in front of you. What's your thought process on that? Obviously, it's context dependent, right? It depends on the environment as well. When everything's going up only, it's relatively easier to do something like that. What's your thought process on that, and how do you filter information or find setups for that matter? You kind of covered this before, but if you could touch upon that, that would be great.
Yeah, I think you have to be very careful with your approach so that you're aware of different market phases. There's this example that I like. I think it was 3Coma or some crypto company that was selling algos that work on the way up in 2021. So their clients make a lot of money because their bots are basically designed to long the market and make money longing the market. But then in 2022, their clientele just lose money. They don't really adapt the bots, and they give it back on the way down and complain. And then the user base is lost as well. So you need to be able to adapt and survive through different market conditions. Whether everybody has their strengths and weaknesses, and I think one of my weaknesses is I cannot sit still, right? I'm always kind of doing something, and that's really a problem, because ultimately, if I know I make most of my money on the uptrends, then I should really only be trading the uptrends. And it's pretty rare that you have a strong uptrend in crypto. And I kind of have a grasp of how I would do it. So I'm truly considering switching on and off the trading activity in that sense. And I think being able to evolve by finding new ways to approach the market is important. If what you meant by that is you don't look at one market, let's say BTC, and you specialize in no singular market, but instead you look at the market broadly, like you treat SPX the same way you treat Bitcoin or ETH, I think that will not work very well. I think it's better to specialize in one niche, let's say crypto. That's just my perspective on that.
Yeah, agreed. And I think you touched upon a great point. I think I was reading something along like I don't know who it was at this point, but there was something about, people usually think there's two positions in the market, long and short, but there's a third one, right, sitting on your hands. And myself included, that's something that I'm still trying to get better at in terms of learning when to sit on my hands. And one other thing that there's a conversation that comes up quite often, and someone tweeted this. Again, I don't know who it was at this point, but I'm gonna kind of paraphrase. The sentence goes something along the lines of, "I'm too discretionary for my quant friends, but I'm too mechanical for my discretionary friends." What is your thought process on that? What does your strategy execution look like? How discretionary or mechanical are you in that sense when trading?
Very discretionary. I decide when to enter or exit the trade. So I don't really rely on algorithms. I wish I could automate a lot of my trading, and eventually I might look into that. I think it's a great way to make your life better. But I'm not good enough with building algorithms.
Right.
So I would need to start the learning curve, which I'm intending to. It's in the plans for me to automate some of my trading, but
Right.
so far up until now, I've done very good purely discretionary. I decide where to buy and sell depending on my market insights.
That makes sense. And I've spoken to traders who have their execution discretionary, but they collect a lot of statistics in order to execute. Do you operate in the same manner?
There's big advantage in statistics.
Right.
I used to do my stats automatically, so I would like spend a day just looking at every swing failure pattern on Bitcoin, and then I would spend the evening comparing with Ethereum. So I would look at the ones that happen at the same time for BTC and ETH, and I would try to find ways that gives me a statistical significance in trades, and find conviction in my trading in that regards. I think there's big advantage in doing so. Doing it manually can maybe help nudge you in some pathways towards edge, but ultimately, if you know how to code and how to gather the statistics with code, it's so much more efficient. So I had people who helped me with code at some point. Simple stats like, you know, I remember, I think 2019 was, or was it? Yeah, 2019. There was this tendency of the market to, I think, dump during the Asian hours and pump during the Western session, and you could literally make money from just
Just from that.
for like a month straight. You could literally just take advantage of that. So I do think if you can do some, at least some very basic statistical analysis to give you some backbone in your conviction, it's great. Everyone should do it.
Yeah, absolutely. I agree with that. And speaking of statistics, there's a book. I don't know if you've read it. I think you told me before that you might not have read it, but it's called Thinking in Bets, and it kind of talks about the thought process of poker. It's by Ann Duke, and there's a quote in there that says, "Life is poker, not chess, and all decisions are bets." How do you think someone can become better at weighing out probabilities and determining EV? Is that's just like a trial and error process? And how do you go about developing conviction in terms of understanding when to size up and going all in, or betting the house, for that matter, if you want to, for lack of a better term?
Yeah, so that's a tricky one because oftentimes, actually, my biggest losses were from the biggest size. So I clearly don't understand when to size up. I think that if I bet, because I over risk, actually, it led to me trading bigger size in average, and had some positive effect in that regard. But if you manage to size optimally, um, it's great. Size is a weapon as a trader. So learning to control your size is definitely some prerequisite. I'm the kind of guy who will try to bet the house on every single trade, unfortunately. So that's why I use the 2% risk management daily stops on the account that I mentioned earlier. I think that I'm not the best person to ask about when it's time to size up big time, but I will say this: there's very few opportunities in crypto that are life changing,
Right.
and by that I mean March 2020 kind of events, right? It's extremely rare that you get huge edge that you can instantly know that it's big. I've had maybe a few instances: March 2020, the USDC DPEG, and a few more airdrop kind of discrepancies in markets. So those bets that I could literally quantify and milk for a lot of money are what made me, in a way. If I missed March 2020, there was this last trade-in versus mark price, huge discrepancy on every derivatives platform, and I 10x my crypto holdings that night. So if I missed that night, I would not be very comfortable today. Maybe it's possible I would have drifted a complete different way. And if you see a bet that you have extremely high conviction in, you will recognize it instantly, and you will not sleep until you milked every part of it that's possible. So that night I did not sleep for I think 30 hours. I stayed awake until I cannot make money off of that occurrence anymore. So when you do see one of those life-changing bets, and maybe they come once a year or once every 2 years, it's a crime to miss it. You need to recognize and take advantage of it, and that's what a lot of people fail at, I believe. Because that night I remember I texted some friends to take advantage like I did, and they did not realize the magnitude of it. They did not take advantage. They went to sleep, they closed the machines, and they miss out.
Right.
And that's because they failed to recognize how big it was. So you need to be open-minded enough to recognize when such opportunity is in front of you, and you need to be trying to take advantage when you see those.
Yeah, 100%. And I think there's a lot to be learned from what you're sharing as well in terms of, like, yeah, you said, betting the house has bit you in the ass, but I mean, you've ended up on top, right? And I think most people struggle with that very aspect in terms of sizing up when it actually matters. So I think there's much to be learned there in terms of what you're sharing. Let's move on to risk management, and I think you've kind of covered it already, but if you could touch on a few things. How did you learn to manage your risk? Because I know in an interview, I listened to this interview you did a couple years ago, and you mentioned you faced difficulty in terms of running up accounts initially, and then you'd blow them up the same way that you ran them up. So what shifted for you? I know you mentioned like the prop firm was very integral in terms of your development, but
The key is really in what I said earlier about depositing very
right,
small and trying to run it up,
right,
and you withdraw when you make it big. So you withdraw some of the profits. That as well, on top of having a safety net outside of crypto. So I will not repeat that part. But what I will say about risk management is a lot of people think it makes money. It doesn't. Risk management will not make you money. It will just keep you alive.
yeah,
Even if you know how to make money and you have edge, you will lose everything without risk management, because you will bet the house and eventually lose it. You need to be recognizing the risk of ruins at different places and find ways to mitigate the risk of ruin, so that you never risk the career in one single trade. You never want to risk the career. That's how you survive very long. And surviving very long, you will go through those opportunities that maybe come once in every 2 years and make you 10 times richer. So risk management is an absolute necessity for anybody who wants to make a career out of trading.
yeah, agreed. I mean, I think that's a really great point. I mean, in terms of risk management, it keeps you alive. If you don't have any chips to sit at the table, that you're out of the game basically, right? So if there's no risk management, you're just not going to be able to be playing you're not going to be able to play the game anymore. So you've been around for a while, right? And what I wanted to ask you was, what qualities do you think are key for a trader to be successful in your opinion? And also, what do you think are like flaws that you see that prevent traders from being profitable in your opinion?
I think being curious is a big one. Somehow, I think curiosity is big. Um, you need to be able to think in EV as well. You need to be able to try to find ways to view the market outside of the box. So if you look at just the chart, then why do you have an advantage over everybody else who sees the same chart? You need to ask those honest questions and reflect on it. And honesty is not something that's very intuitive for some people. You need to be able to be humble, because ultimately you will be wrong many times. That's the reality of trading. You see a lot of people post wins on Twitter, let's say, and they just go quiet when the market goes against them. That's how you know they're in trouble.
Right,
I've noticed this trend. Influencer will post millions of P&L, and then eventually there's a downturn and they become very quiet. And that's when you worry for them, because they're not necessarily humble enough to share that they lost the money. But the reason they're quiet is because they're having a rough time. So you need to be able to reflect on every win and every loss and analyze the trade, not from the outcome of it, but from the entry reason. And that's something that I think we preached a lot at the prop shop at the time. Is, let's say you win a trade, it can be a very bad trade, right? You can take a very poor decision and end up making money on it. And similarly, you can lose money on a very good trade. So I think it comes down to your plan. which is your entry reason, which is your edge. That's all that matters. So you evaluate the trade outcome from your entry reason, and that's the key to putting your trading to the next level. Do you think that the reason you entered that trade was valid? Would you take that trade again if it came? What went right? What went wrong through the trade? Did you micromanage? Something that can help a lot is journaling. So you need to be able to reflect on yourself and your trading, and journaling really helps, because even if you think you have that ability, when you put things to word on paper, you can go back and kind of munch on those words and change some things as you read again, and you will find things that you otherwise wouldn't from just thinking. So writing helps a lot, but ultimately it comes down to being curious, being very edge driven. Edge is the only thing that makes money, and you need to evaluate your trade from your edge, which is your entry reason.
Yeah, thank you for sharing that. I think those are some great lessons for anyone that's listening in. Let's pivot a little bit, and this part is a little bit speculative in nature, this part of the conversation. But what I wanted to ask you was, what is your thought process in terms of where the market is headed in the short term and maybe the longer term in the next couple of months? Is that something you think about, or you just trade whatever's in front of you right now?
Up only.
Up only. All right.
That's
Hey,
what I
you
hope
already
for.
impressed.
I mean, if you look at the last time we had elections, you
Yeah.
get up only from October onward. I think
Right.
September was not so great. October up only, November up only, and then you had a couple months of up only after that even. So that's what I'm hoping for, but I don't know the future. Obviously, I've seen the market in the short term was trending up very strongly. As I said, the sell walls just get obliterated. Like some idiosyncratic buyer seems to be there. We're
Right.
pretty close to all-time high. We've not printed the all-time high in more than 6 months,
Yep.
and the elections are coming. We just had a big rate cut. I'm just hoping that it goes to all-time high, and if it goes to all-time high, sky is the limit. So I'm pretty optimistic, carefully as well, right? I don't want to get
Yeah.
stuck in my euphoria if the market starts going south, but I think it's pretty reasonable to think that we can go higher from here.
Yeah, absolutely. And is macro something you keep an eye on or look at all, or do you have a take on that?
Yeah, I mean, as much as I hate it, I think this kind of rally started after FOMC. So I have
Right.
to keep an eye on macro, but
Yeah.
I'm not very good at macro, so I listen to some friends of mine on macro mostly. And if they're flipping bullish, and I know they've traded those stocks and they know about the FOMC very well, I'll just take their opinion for it. I'm not an economist or someone who traded stocks.
Yeah, that makes sense. Are there any narratives in particular that you're keeping your eye on crypto, or anything that interests you in general in the space right now?
I think one that's a bit let me think. I like the broker dealers recently. So I've tested some software, and I found out that there's some software that can really help with execution on certain sizes. For example, CoinRoss, Talos, those kind. There's some other broker dealers who are a bit more basic as well that are very popular. But I like to learn about those kind of things. I think if you manage to find good software, there's improvement in your ability to execute. Then on top of that, I like to hear about the DEXs. I've been quite surprised to see how much volume Hyperliquid can push. I haven't traded on it
Yes.
personally, but it's
Right.
like people seem to think it's on track to have this kind of volume on Bybit or OKX, which is something I didn't think is possible so soon. So I'm just keeping an eye on it. I'm not trading there. I don't really trust sending my flow there because it can be front run very easily. I think there's
Right.
some software that you can use to mitigate those risks, but ultimately there's a big front running risk, and that's kind of why I've been staying out. Obviously, on sexes, then you need to trust the centralized exchange with your flow, but I think it's just better for now, and I'm just watching. And if it becomes higher volume than centralized exchanges, then I will have to migrate some volume myself. So aside from DEXs as well, I've been watching Ethereum. I think Ethereum might have its moment. That's what I hope for, at least. I mean, it went. The sentiment is so bad on Ethereum, and
Yeah,
I've
yeah,
been
absolutely.
buying
Salsa,
it.
my brother, don't speak too soon. Don't speak too soon. Let it do something
We'll
first.
see, but my average entry is higher than now. So
Yeah,
I account for my Ethereum in terms of BTC, and that's how I judge if it's a success or no. I've been
right.
buying since, let's say, 0.05. Now it's 0.041. So my average entry is maybe 0.047. I'm underwater more than 10% on my ETH bag, but ultimately, what we've seen in late 2020, I think, or even early 2021, was that it started outperforming after the elections. I think
Right.
it was in January or something
Yeah, yeah,
like
yeah.
that. So I'm hoping for it to do something similar, maybe early next year, or maybe now it starts outperforming. I'm not exactly sure, but I'm holding a bag and I'm pretty optimistic for that in the next 6 months because we haven't seen any hype with the ETF. It's been underwhelming, and I think that the best catalyst for those kind of coins is price going up. Price goes up, and all of a sudden the ETF
Absolutely.
starts like the
Yeah.
ETF starts picking up. It's a big narrative. Then people start saying it's the green energy because of proof of stake, and suddenly it's not the piece of shit proof of stake coin, it's the green energy coin. And the narrative can shift extremely quickly in that
Oh
regards.
yeah.
I've seen it many times. And the fact that it has lived through those kind of despair to euphoria cycles many times in the past, I think I'm optimistic on it. Um, so I like it as a trade for the next 6 months, even though it's maybe something that I've been wrong for the past few months. I think it's still valid.
Yeah, I mean, I hold a spot ETH bag as well, and it's like you said, a lot of people look for narratives, but price is a narrative in this space, right? A few green candles, and we'll find some narrative that's going to match along with the price. And there's so much reflexivity in this market as well. Once starts moving in one direction, it keeps going for a while. All right, so it looks like we're at the 50-minute mark, so I do want to start wrapping this up a little bit quick. We did get some audience questions. I'm gonna maybe ask a few, and maybe we can go through them really quickly. One of them was from
Sure.
Smokey, and he's asking you what's your favorite hot sauce is. If you could share your favorite hot sauce.
My favorite hot sauce. I don't know how to pronounce this. I'm gonna massacre it. Sriracha.
Sriracha. Yeah, yeah. Okay. All
Yes.
right. Okay. All right. Let's see. Someone is asking if having responsibilities in life, like having a family or wife and children, changed how you approach the market.
No, but it made my life better for sure.
Let's see. What else do we have here? Are there any favorite free or paid tools that you use or platforms that you use?
I will talk about this a bit further in a couple months because I'm still yet to decide
Okay.
uh, on certain providers, and I'm trying to figure out which one is the best still.
Okay, that makes sense. Someone else is asking. Well, this is part of the same chain. It's 0x0 cool. He's asking. You've used exercise and biking as a healthy way to step away from a trade. How has this helped you avoiding exiting and entering trades badly?
Yeah, so I was that guy at the prop shop. I was known to come in the office in the morning, sit there until I enter a trade, and when I'm in that trade, I set my stop, I set my take profits, and I go on a bike ride. And the reason for that is because I tend to micromanage too much. I
Right.
was maybe trading a bit oversized as well, but it was not oversized if I go on a bike ride and I cannot touch it because then it doesn't make me micromanage, right? So I would I would I would take the stress from being in a position away by diverting myself with exercise. And it doesn't have to be cycling, it just happened to be something I like to do. Back then, I was living in Canada, so there's a lot of space and a lot of hills, and I just enjoyed biking a lot. So it helped me in my trading in that sense. I would just disconnect when I have to let the trade run its course.
All right, thank you for sharing that. I there's some of these questions here we've pretty much answered in this conversation already, so I'm going to go ahead and skip over those. So you were talking about health and biking. So is biking something you do regularly for fitness now, or is there anything else that you do in terms of managing your stress and or looking after your health and fitness?
So fitness has always been something I do every single day. So even when I sleep deprived and eat like shit, I would exercise every day, and it's mainly because I think it's the best way to cope with all those other negative things. Even if you sleep deprive by exercising, at least you mitigate some of the symptoms that
Right.
are associated with sleep deprivation. And it's also a way for me to relieve stress. It's like meditation in a sense. Some people don't like certain types of exercise, but to me, when I was 15, I had some rough time at some point, some bad experience with it was drug related basically, and I think it was a very big lesson for me. But I had some issues for a couple months, and one thing I did was whenever I felt stressed or anything, I would just run it out. I would go spend all my energy, then you don't have energy anymore to stress, or it's better. It relieves some stress for sure. So I would run until I want to puke, and then I come back home and I feel better. I think exercise is great. It's not only great for health, it's great for your mentality. And I just try to keep fit also. It's definitely nice to be able to move around and to be in a healthy weight.
Yeah, I think that's huge, and that's something that I ask everyone because traders tend to fall into this pitfall of just sitting at the screen and eating like shit, and I think the cognitive reasoning and abilities are directly connected with your health. So those things are extremely important. And this is probably something, it would be great to get you on again. I know we're a little short on time, so it would be awesome in the future if we get you back on and get some of your thoughts on this area as well. But we're going to go ahead and wrap this. Ask you, what advice would you have to anyone that's listening in who wants some wisdom from you in terms of trading?
I think just buy a spot bag and hold it. Whatever you can afford to lose fully, you put it in Bitcoin and you just wait, or even Ethereum, because Bitcoin still has potential to do 3x, right? It can go to 200K, it would not be shocking. And if you play with leverage, most likely you will have a steep learning curve and a lot of expenses related to that. Maybe you will give up before you have the time to find profitability. But buying Bitcoin itself is probably something that you will not regret 5 years down the road, just my opinion. So I think buying Bitcoin is good. I'm doing that.
Okay, awesome. Are there any account recommendations or any accounts that you would nominate for an episode of Perpetual Perspectives? Anyone that I can bring on and have a conversation with? Who would you nominate for that?
Oh, I will think about it and come back to you on it.
Okay, yeah, that sounds good. Yeah, let me know whenever. And is there anything that you'd like to plug? You're working on, or anything in the future?
No, I have nothing to market right now. It's okay.
Okay,
I
all right,
appreciate
perfect. Yeah, I just want to
that.
give people the opportunity when they come on. But man, I really appreciate you taking the time to have this conversation with me, Salsa. And before I end, I usually end on a thought-provoking note. But I'd like to read a tweet that's actually from a thread that you have pinned on your profile, which I really like. And it goes, in trading, knowing what not to do is a huge advantage. It will prevent you from bleeding value, which has an exponential wealth effect over time. It's often far more important than knowing what to do when dealing with asymmetric information. Your options are not black and white. So I really love that. So we'll end on that. And to everyone listening in, I hope you enjoyed this conversation and were able to take away some actionable things that you can consider to improve upon or something that you can think more about. I'll be back with another thought-provoking conversation next time. Take care. And hopefully we'll get Salsa back on in the future as well. Thanks, man. Appreciate it.
Cheers. Thank you so much for having me. Have a great day.